Welcome to Mining Over Canada. Join the Canadian Securities Exchange and our partners in a first-hand look into our country's vast mining landscape. Hi, welcome to Mining Over Canada. In today's edition, I am talking with Adrian Day. Adrian, welcome to Mining Over Canada.
Well, thank you for having me.
So, Adrian, I know who you are, and anybody who's done any sort of investing in the resource junior space over the last number of years should know who you are. But a lot of our audience who are new to this may not. Tell us who you are and what you do.
Well, I shall do that. And, you know, I don't mind if people don't know who I am. A recent survey of sixth form, 16 to 18-year-old kids in England showed that 2/3 of the people didn't know who Winston Churchill was. So if they don't know who Winston Churchill is, I'm not surprised some people don't know who Adrian Day is. So I'm from England. I came over to this side of the Atlantic many, many decades ago. And I started my money management firm in 1991. So I've been going at it quite a long time. We don't only invest in resources, we invest in global markets as well, but we do have a sort of emphasis on resources. And we have a gold fund as well.
Why resources?
You know, I got into that originally through an interest in gold itself rather than in other resources. And I came to gold, frankly, through economic theory, if you like. I was very interested in the gold standard. I was very interested in gold's monetary role. My very first investment as an 11-year-old in short pants was a gold coin. So I just had an interest in gold that came from the economic and political economy background. And then, eventually started looking at investing in gold. And if you're investing in gold, it's natural to start looking at gold stocks, gold companies.
You mentioned the gold standard, and I'm going completely off track with this one. And I'm going to blame our CEO, Richard Carlton, of the Canadian Securities Exchange. You can check out my interview with Richard Carlton at www.youtube.com under CSE TV. Now, with the gold standard, do you know the book The Wizard of Oz?
I'm familiar with it, yeah.
So I had a talk with Richard one day, and he's like, do you like the story, Wizard of Oz? And I was like, yeah, of course. I like the story. I liked the movie. And he's like, do you want to remember it and remember it the way that you pictured it? Or do you want to know the real story behind it? And I was getting nervous. It was like, well, of course I'd like to remember it, but no, you piqued my curiosity. I don't think there's anything you could say that would change. And he's like, the Wizard of Oz was an allegory to get rid of the gold standard and shift to silver. And I went, what? What do you mean? He's like, yeah, the Oz stood for ounces. Emerald City was Washington, D.C., and all the characters represented different characters and politicians at the time. Like, it was, and then of course I did some further research, and sure enough, there's a theory that the Wizard of Oz was written as an allegory to getting rid of the gold standard, right, and to move it to silver. So.
Right. And the wizard, of course, is the Federal Reserve, and they pull back the curtain and find he's just pulling levers.
Yes, because the shoes, Dorothy's shoes were originally silver, but they used red when they made the movie for Technicolor because they thought it would have more pop.
Right.
So that's my tangential story.
Well, nice tangent.
Let's continue down the road with gold. Where is it going? Why is it going up? Will it come back down at all? How long do you see this going?
The second question, will it come back down at all? is the easiest one to answer. You know, gold stocks in particular have always been extremely volatile, and gold stocks react in a leveraged manner to any movement in gold. So we're always going to have volatility in the gold stocks. Gold itself, couple of things. Why is it going up? I think the primary reason it's going up is central bank monetary policy. And this is not so much Canada, which on a relative basis has been one of the more responsible central banks over the last 10 years, but particularly the US, the Fed, Federal Reserve, the European Central Bank, and the Bank of Japan, which are all, and they're the three largest, of course, and they're all pursuing excessively loose monetary policies. So when you have excessive credit created by central banks, that is bad for the purchasing power of the currency and consequently positive for gold. Now, when people say, well, you know, it's done very well this year in US dollar terms, you know, whatever, it's up 40% or something from the March low, which is a huge move for gold in 1 year. What's the outlook? I say, well, let me ask you two rhetorical questions. Do you think the US, the new incoming US government and Congress is going to stop spending money and is going to remember things, concepts like a balanced budget? Okay, and if the answer to that is no, they're not going to stop, then is the Federal Reserve going to suddenly turn around and say, you know what, guys, you want to spend money, you've got to find it somewhere, raise taxes, borrow it or something. We're not going to accommodate your spending anymore. No, we're going to get more of the same, and gold is a primary beneficiary of that. Now, you know, when you ask about is gold going to come down, I mean, the interesting thing over the long term is that gold's purpose is to hold its purchasing power. Gold is not intended to be a speculative vehicle, a growth vehicle, an income vehicle. It's meant to preserve purchasing power. And in fact, as we know, over the long term, by long term, I mean very long term, it has done precisely that. They like to say that a Roman centurion's outfit costs the same as a, you know, suit of clothes today. And, you know, you can look back over the last century, 2 centuries, 3 centuries, and gold has basically maintained its purchasing power. But in the shorter term, of course, you know, it does move up and down in response to what is happening to the value of currencies. That's the primary factor affecting gold is what's happening to the value, the purchasing power of currencies. Now, the dollar, of course, people get confused with this. The dollar can be a strong currency against the yen and the euro and the British pound and even the Canadian dollar. But that doesn't mean it's maintaining its purchasing power. That's the critical factor.
That's where I sort of wanted to go down that road of the Canadian economy to the US, to Brazil, to countries in Europe, to China even, and the tie into resources, the tie into gold, and where we are headed. And and add a global pandemic to that cocktail.
Right. Yeah. But I mean, obviously, the lockdowns that have come, the economic restrictions that have come as a result of the pandemic have confused the picture. No question about that. For one thing, I think they have postponed the inflationary impact of the new stimulus that we've seen. We can talk about that if you want.
Yes.
But
yes.
clearly, we're seeing, I mean, we're seeing a few things. First of all, we're seeing around the world, not just in North America, but around the world, we're seeing people losing confidence in the purchasing power of their own currencies. And that's just as true. You mentioned Brazil. It's just as true for a Brazilian as it is for a US person. And when you lose confidence in purchasing power, you tend to turn towards, unless there are other strong currencies, you tend to turn towards gold as well as other things. Like the stock market can preserve purchasing power because it has growth built in. But we're seeing that both at the retail level or the individual level, but we're also seeing it at the national level. If you look at central banks around the world, 40 years ago, 80% of foreign reserves of central banks, that is not the domestic currency of a reserve, but anything other than the domestic currency, about 75 to 80% was held in the US dollar. And that has been changing, things like that change slowly, they don't change rapidly, but that has been changing fairly steadily, let's say, for the last 30 or 40 years. And particularly in the last 10 years, you have seen a decline in the amount of US dollars held by foreign central banks. Now, because the US dollar debt has gone up and US monetary issuance has gone up so dramatically in the last 10 years, it's more a relative percentage decline than it is an absolute decline. In other words, if you look at China, for example, 10 years ago, China had about, something like 8 to 9% of all US treasuries were held by China. Last year, it was 4%. So the percentage has gone down dramatically, but it's gone down primarily by China and other countries not buying more US treasuries rather than selling what they have. Some countries have sold, like Russia, but that's as much for political reasons as for anything else, frankly.
Right. What does this, and you mentioned this earlier with the apparently the new incoming government in the United States, and they appear to be democratic. What does that mean for Canada? What does that mean for the resource sector traditionally and perhaps going forward?
Yeah, huge question. And first of all, I should just say my comment on is the government going to stop spending? The answer would have been the same if Trump had won.
So, yeah, no, it's that's one thing they can agree on.
Yeah, very good. And in fact, in many ways, Biden winning the presidency, but the Republicans retaining control of the Senate is actually, for gold, the least desirable outcome. It's only a very good outcome as opposed to an extraordinary outcome, because I think the Republicans in the Senate are suddenly going to remember fiscal rectitude and things like balanced budgets. So they're going to be fighting President Biden, if indeed he is inaugurated. They're going to be fighting the administration spending plans in a way that they did not fight President Trump's spending plans. I don't want to get into politics, but I think that's just the way it's going.
Right.
Now, what are the implications of, let's say the Republicans do retain control of the Senate, which it appears, but Biden becomes president. A few things. Number one, there's probably overall, we're going to see spending, but for resources in Canada in particular, we're going to see certainly a shift away from oil at probably a faster rate. We're already shifting away from oil, but at a faster rate than it has been. That's certainly one factor. A faster move towards cleaner energy than we have been seeing. That's all part of the same picture there. I think we're probably going to see a greater chance of more infrastructure spending, I'm a little bit skeptical on that because, of course, people have been talking about the need for US infrastructure spending, you know, for ever since I came to America. They've been talking about that because, let's face it, America's infrastructure, particularly in the older cities, New York, Los Angeles, and all Boston, and all the big north, as well as Los Angeles, but all the big northeast cities, the infrastructure is terribly, terribly old. You look at JFK Airport, and it's, you know, it's a total disgrace. You know, Kuala Lumpur has a better airport than New York City.
That's true.
You look at the roads when you drive from LaGuardia into Manhattan, and again, you know, Kuala Lumpur has better roads from the airport to the city. No train service from the airport to the city. We could go on and on and on. So everybody knows this. And the pipes underneath, you know, in some cases are 100 years old. Constant leaks and, you know, repairs needed. Everybody agrees on that. But of course, that's the kind of huge long-term project that, you know, in a democracy, governments with a 4-year, in the US, a 4-year time frame, it's very easy to put off. But I think there's probably let's say there's probably a greater chance under a Biden presidency, especially with the COVID shutdown, the need to stimulate the economy, et cetera, there's probably a greater chance that we'll see a bit more stimulus spending. Now, what do all of those things mean? Well, obviously, you know, it's clear what it means for oil companies, for the, I've forgotten what you call them now, tar sands, but they keep changing the name of it to make it sound more pleasant.
The oil sands?
Oil sands, yeah. They used to be called tar sands, remember? And that just gave the wrong image or the wrong picture.
And unfortunately, I do remember.
Yeah. But certainly, you know, the companies in the US, the large independent E&P companies, as well as some of the Canadians that operate in the US in the fracking industry, you know, that will be a negative for them. But of course, it'll be a huge positive for copper and nickel, as well as a lot of the smaller battery metals, whether it's lithium or cobalt or whatever. But particularly, it'll be a big benefit for copper and nickel. I mean, if you look at copper benefits, as we know, from a move to electric vehicles. An electric vehicle consumes 4 times as much copper as an internal combustion engine vehicle. And I think, if I may make a snide comment, I think the greenies sometimes forget that. You know, when you're asking for electric vehicles, you are asking for more copper and nickel mining.
Right.
So let's be clear on that. Infrastructure, of course, is huge for both copper as well as steel. So copper and nickel are huge benefits of both of those sort of moves. But those are the main things I see.
You have a very global perspective. What attracts you to Canada or about Canada, say, the most?
From the investment point of view, you mean?
From the investment point of view.
Yeah. Well, there's some obvious things. I mean, Canada has a rule of law. And even though we do occasionally get upsets, you know, like when Alberta decides to raise a tax on oil, or, you know, BC elects people that like to slow down, I'm trying to be diplomatic, permitting. But basically, we have the rule of law in Canada. As a foreign investor, you sort of know where you are. You do not expect to wake up one day and find that your mine was nationalized, or, I mean, I could certainly talk about some of the things that have gone on in Canada that I don't like, but compared with virtually every other country in the world, they are small. So that's one thing. And I think, generally speaking, the capital markets are, I mean, it's chicken and egg, of course, but the capital markets are extremely efficient. You can raise money in Canada. You can raise money easily and quickly in Canada, or through a Canadian vehicle, I should say, because obviously some of the money comes from non-Canadian people. But again, compared with most other countries in the world, I think Canada tries to make that process investor friendly, which is good. Now, there's always a balance, of course, in regulation generally. You know, there's a balance, because we can look at some of the shenanigans that continue to go on in Vancouver, but I think you could say, well, should we have tighter regulation? Well, tighter regulation then tends to then slow down the whole process of raising capital. So I think at the moment, Canada has a very good balance. And I mean, I talk about shenanigans in Vancouver, but it is absolutely nothing compared with, you know, 30 or 40 years ago. We all know that.
Right. What, when you do your, when you're choosing what to invest in or where to look, what are some of the things that catch your eye? What's your always go to? What do you always avoid? If there are absolutes, and I know there's no absolutes, but
Well, yeah, and there's two things to remember, of course. You know, companies will have a home market, it might be a Canadian market, but its assets might be in, you know, Democratic Republic of Congo or something.
right,
So there's and of course a London company can have assets in Canada. So there's a difference between the home market and where the assets are. You know, for me, the number one thing I always look at is management. Management is absolutely key, always, for everything. The good thing about Canada, of course, is a very deep market, a very broad market, but it's still a small market. So everybody knows each other. So, and this is just for me, so if there's a new company come out, a new Canadian company, wherever the assets are, it's very easy for me with 2, 3, 4 phone calls to find a couple of people that know that person, that know that project, that can talk to me about it. There are some countries where, you know, it's such a small market that nobody knows anything. And there are sort of, I mean, you know, you just can't find someone who knows the person, because
right,
it's a small market and it's a small part of a bigger economy. Whereas in Canada, of course, the mining industry, just like Australia, the mining industry is a very significant part of the economy. And as I say, it's broad and deep, but it's also still a relatively small industry. I mean, when I invest in a gold stock, there's hardly a gold stock I buy where I don't know and have not met the top management. And probably I've had dinner, and if not dinner, I've had lunch or breakfast with them. I mean, it's a small enough industry where you can get to know everybody, which is very helpful.
you know, I've spoken with a lot of people, and when they talk about investing, management keeps coming up. If it's not 1A, it is 1B. It's and that's why I was
Well,
laughing.
it's absolutely critical, and I'm not a geologist. Now, of course, geologists like to get into the nitty-gritty of the rocks and so on, but I always say good management with a good balance sheet and a lousy property will beat bad management with a lousy balance sheet and a great property. Because the first one will realize they've got a bad property and will move on and find something good, whereas the bad management can mess up a good project every time.
Truer words have not been spoken, and that is, you know what, I'm going to close off on that note, because you have given us so much information, so much knowledge, so much insight. And on behalf of the Canadian Securities Exchange, on behalf of myself, Barrington Miller, and of Mining Over Canada, I'd like to thank you, Adrian Day, for taking the time to share your wisdom and knowledge with us.
Well, thank you very much. I really appreciate it.
And if somebody wanted to get in touch with you or connect with you and your group, how would they do that, or what's the best way?
Well, we have a website. It's adriandayassetmanagement.com.
AdrianDayAssetManagement.com.
Yep.
Check it out. And if you like this, check out more Mining Over Canada. Again, available on YouTube at CSE_TV. You can also go to our website, www.thecsc.com. Thank you very much. Have a good day.
Thank you.